If you're starting a business, one of the first big questions is this: should you be an LLC, a corporation, or a partnership? The decision affects your taxes, your liability, and how your business can grow. It is just not paperwork. It is the legal foundation of everything you build. Now I want to break this all down for you. First, let's talk about your partnership. A partnership exists when two or more people go into business together and do not form another legal entity. In Alabama, that can happen automatically if you start operating together and sharing profits. Partnerships are simple to start, but they come with risk. In a general partnership, each partner can be personally responsible for the debts and obligations. That means one partner's mistake can impact the other partner personally. From a tax standpoint, partnerships are pass-through entities. The businesses file an informational return, and profits pass through to the partner's personal tax return. Partnerships can work well in certain situations, especially when there is a strong trust and clear agreements. The problem is that many people skip a formal partnership agreement. This is where disputes and confusion begin. Now let's move to LLCs. An LLC stands for Limited Liability Company. The word limited is important. It is designed to separate your personal assets from your business liabilities as long as it's set up and operated properly. LLCs are flexible. They can be owned by one person or multiple people. They can be taxed as a sole proprietorship, partnership, or even elect S corporation status for tax purposes. That flexibility is why LLCs are so popular. For many small businesses and professional practices, an LLC provides liability protection and tax simplicity at the same time. Profits usually pass through to your personal return, which avoid corporate double taxation. However, forming an LLC is not enough by itself. You still need an operating agreement. You still need separate bank accounts. You still need to follow compliance requirements in Alabama. Now let's talk about corporations. There are two primary types people discuss most often. There's a C corporation and the S corporation. A C corporation is a separate legal and tax entity. The corporation pays corporate income tax. If profits are distributed to shareholders as dividends, those dividends are taxed again on an individual level. That is what people mean by double taxation. C corporations can make sense for businesses seeking outside investors or planning for significant growth. They allow for multiple classes of stocks and more complex ownership structures. An S corporation is different. S corporations is actually a tax election, not a legal entity itself. An LLC or a corporation can elect to be taxed as an S corporation if it qualifies. S corporations are pass-through entities, meaning profits pass through the owner's personal tax returns. One potential advantage is that owners who actively work in the business pay themselves a reasonable salary through payroll, and additional profits may be distributed in a way that reduces self-employment tax exposure. However, S corporations come with stricter rules. There are limits in the number and type of shareholders. Payroll must be handled correctly. Compensation must be reasonable. Bookkeeping must be clean. Now the big question, how do you choose? The right structure depends on several factors, including how many owners are involved, how much liability risk the business carries, how the business will generate income, whether you plan to bring in investors, how much profit you expect, and how you plan to pay yourself. For example, a solo consultant with minimal risk exposure may start comfortably as an LLC, taxed as a sole proprietorship. Two professionals opening a practice together may choose an LLC with a detailed operating agreement. A business seeking venture capital funding may lean toward a C corporation. A profitable small business owner with consistent earnings may consider an S corporation election for tax planning purposes. There is no universal answer. One of the biggest mistakes I see is choosing a structure based on what a friend did, or what an online article suggested, or what was the fastest to file. Your business is unique, and your structure should reflect that. Another common mistake is focusing only on taxes and ignoring liability, or focusing only on liability and ignoring long-term growth plans. The structure you choose today can either support your growth or limit it later. If you're unsure which direction makes sense, that conversation should happen before you file the paperwork. My law partner, Debora Palmer, and I offer free business formation and legal structure consultation. During this 30-minute consultation, we'll walk through your goals and your risk exposure, your ownership structure, and your long-term plans. We'll help you choose between an LLC, corporation, partnership, or other structure that fits your situation. We explain how to protect your personal assets. We outline the documents you need to stay compliant in Alabama, and we help you avoid mistakes that can cost you later. Consultations are held in person at our Montgomery office. You can request a consultation date, time, and our office will follow up to confirm your appointment. Choosing the right structure is not about copying what someone else did. It's about building your business on a foundation that supports where you are headed. If you're starting a business or restructuring your current one, take the time to choose wisely. We are here to help you.